Hey guys, Mike here. So, oh boy, yeah, buddy. I think this day chalks up to one of those. What I've been saying, you're always gonna get good deals, right, on these stocks. When you think they're not gonna stop going up, they're gonna come right back down to your price range, maybe even lower, right? And so I was looking at the 1 minute chart, following Jerome Powell's speech, and I got the exact moment to where we popped and then we dropped, and you'll see the candle, and you go, "Ooh, that's not good." And we never recovered after that. And I mean, and there's a lot of stuff I'm gonna go over, but man, look at this right here. I'll let you listen to him, but oh boy, I mean, it is just red, red. Look at Tupperware. I don't know the stop, but good and Lord, down 42% one day. That's gonna be a penny stock soon. All the high, all the risk stuff. Twilio reports tomorrow down 10% already. I mean, the banks started heading down. It didn't matter. Biotech, travel. Look at Airbnb. Worst one-day fall since the IPO, I believe it is. Man, Coinbase, crypto got crushed. Jerome, Santa Claus, Powell took it away from everybody. Look at that. I mean, even the Chinese stocks were green, even while he was speaking. Tanked. SoFi gave back every single gain it had from its earnings. Didn't matter. Look at all the fintechs. A lot of them report tomorrow. Oof, they're down. All the semiconductors were green. See you later. Shop was green. Roblox was green. Arcade was green before the speech. And then the big boys still getting taken out behind the woodshed. I mean, and then the indexes. Oh my goodness. And what's crazy? Look at the VIX, man. The VIX was down 1%, even with the S&P down 2%. People were selling risk, and then finally it gets barely green. I mean, look at that. That is just mind-boggling. And you look. I mean, honestly, this is what happened. A lot of people feel there's the rug pull. Remember we talked about it? There's going to be a rug pull as soon as they didn't hear what they wanted to hear. That's what it was. And right here, you can see right here he started to speak right there. And we got a nice run up, and it's like, oh, cool. We know where this is going. And then look at this candle. All of a sudden, and it never recovered. It was just a wave down from there. But that candle started it all. And this is what he had to say at that very moment.
At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
And what happened from there is you saw that wave up, right? A couple different ways, because he got asked questions specifically about the raising of the rates and the velocity of them, stuff like that, and the pace, and he just made sure I'm not giving it to you. And the market was like, well, he's not giving it to us, so we don't know. Is it 50 in December? And he stayed vague, stuck to his guns, and some people call it tough language. And for Jerome, honestly, yeah, because you got to put that on a curve, because he's not exactly some guy who really tries to offend people and all that stuff. But yeah, they didn't give it to him, and the market was like, well, crap, right? And so sell, 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 right? But then here's the other thing he said, and this is the big one. This is the number one. And as soon as he started talking this was before that statement. As soon as he started talking this right here about employment, I was like, oh boy, I think we know where this is going.
Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year.
And here's some data we got today, guys, the ADP National Employment Report. And wow, look at that right there. It actually went up again. I mean, it's just amazing. Like, yep, that's what he's talking about. I mean, we're just remaining strong. And then look at the wages. That's why you can't have price stability. Year over year, 7.7% according to this same report. And that's why, he's got to stick to his guns. The Fed has to. I said that in another video. I'm like, do they need to be, worrying about other stuff? No. I don't like to see the markets tank no better than anybody else. But it's like, dude, you got to get this inflation under control, and you got one shot. That's really what you have here. And so we're going to see, because the pace they're going, they'll get if they keep going, that is, they'll get that rate up to dang close to at least core inflation, right? And so, but that's what they got to do. I mean, it sucks, it's painful, but as he goes on to say, you can't allow this to get entrenched. People can't be thinking, oh my God, because it'd be even worse for the economy if people think, oh my God, this is entrenched. I got to start saving every penny and not going out spending anything, right? And doing that, and that would really affect the economy faster than anything, right? And so you don't want that to happen. But then he goes on to say this right here.
Inflation remains well above our longer run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And that's the key, right? I mean, the core, minus food, minus energy, the things they really can't control. They see it. It's just not coming down like they want it to, right? And like he said multiple times that these rate hikes, they are going to take time. And I think what's even, crazier to me is if you look at this right here, I mean, warning here that you're going to need to get your magnifying glasses out to see this. But this is the thing that could really throw a wrench into everything, and that is their balance sheet. I mean, and it's pathetic, honestly. When you look at what they've done so far, which is basically hardly anything, and what's crazy about it is, look at this. Look at that time. Can you see a decrease? I mean, there's a little one. It's a little one. It's like 265 billion, I believe. Then go down here. Look, the biggest monthly drop since July of 2020. And I mean, look down there. That's pathetic. You can barely see it. Look at the increases, guys, to the balance sheet, and look at the decreases. And that's, to me, whatever you want to call it, X factor or the thing that nobody knows about, because that right there can throw a wrench in everything. That's what really can throw a wrench in the bond market and everything else. If they really start wanting to get aggressive and make a difference, they start really not just letting things run off, they start selling. That's what they do. I believe it's either the Bank of England that started selling or going to start selling, because I put out the morning update, Monday, and said, get your popcorn. It's going to be fun to watch, because one of those big central banks is starting to sell bonds and stuff. And it's like, oh, that's going to be interesting, because that will definitely cause some problems in that area. And so we'll see how it goes for them. And maybe our Fed is going, let's just wait and see how it goes over there, and then maybe we'll try it here or whatever. We got to get more aggressive. But so the market tanks, no surprise. And if you look at the chart of the S&P right here, guys, I mean, you can see that we were in that channel I was showing you, and boy, did we drop with a quickness out of that channel. You can see at 2:30 before we started to speak, we were right there on the edge of it, right? And as soon as he started speaking, it fell out. Then we get that pop I showed you and go, oh, wait a minute. Maybe he's going to say something bullish. And then it just absolutely cratered really, really fast. And then if we go back to the daily, you can even see the drop even more. But then if you go back to the last meeting, look at that candle. And then look at the candle right here. I believe this right here, we come down, is actually the last Fed meeting, what they did on September 21st, 22nd. And look at the drop. 4 or 5 straight days of negative drops after that. It'll be interesting to see if we get that and start heading towards those, I guess it'd be June lows first we got to get to before we get to the new lows. And then to make matters worse, you got other stocks that are basically tanking in after hours. You had Roku report earnings, and unless they have a great call, this stock is going to open up in the 40s. Look at that, down 18% after earnings. And I mean, just not good. Then you had another semiconductor stock, Qualcomm, come out. Maybe they'll be great on the call. Right now, down 7%, getting close to a $100. And boy, will they go into 100? Let me know in the comments what you think. What do you think Roku's going to open up tomorrow? I mean, good Lord. I mean, hey, not surprised that they crapped the bed on earnings. I mean, I guess we shouldn't be surprised. And, some things, some side notes to look out for here, I'll tell you is that, November, surprisingly, is actually really good when it comes to the inflows for like mutual fund and ETFs. I mean, you see right there, it's probably, what is that, like the third best month of the year when it comes to inflows. And, other things, China stocks, what are they doing? They were bouncing. The reason why they were bouncing and might continue to bounce, because they're bouncing off this trend line that's been set in place since '05, right? A 17-year support. We know how stocks love support. So even when other stocks were red, they were still green. All right, so that could pull some stuff up. And plus, they've been just beaten down to like record levels at this point in time. And I'll say one thing that surprises me is this is a chart of U.S. private construction spending for residential home improvements. And look at that, up 48% over an annual basis. Look at that line, going straight up still, right now as we speak. And so again, still spending, people still doing improvements, we're still building homes, we're still going out doing the credit cards. I mean, it's still going. As long as I'm telling you, man, as long as those jobs are staying strong, and you get an ADP reports like this, and I think even Jerome Powell, he almost seemed like baffled at one point, like just talking about employment. Like he just, even though, because he said, one thing I cut out there was he was talking about how you see a slowdown, right, in the residential part of it. I know, like, I think Wells Fargo, they're laying off a whole bunch of people on the mortgage side. I have one family friend. He works on the residential side. His company builds all the roofs, and so he said there's been a major switch from single-family homes to multifamily now on that end. We have another neighbor and friend that works in the commercial side, builds hospitals and warehouses and office buildings, that kind of stuff. And he's the supervisor for them, or superintendent, excuse me. And he said, yeah, we can see a slight slowdown, but not as much as you would think at all. And so it's still going. I mean, and just what Jerome Powell talked about with employment, like, one of our other friends just switched jobs and got a huge raise just by, I mean, you're doing the same thing, but you just switch companies and they went, cool, more money. And that's what people are doing. They're getting more money to go to another company. It's like 7%, whatever it was, versus staying with the company, getting about 5.8%, right? And so that's the problem with the price stability. And yes, they asked him in the press conference, how much do wages have to do with inflation? And he said, yeah, it has to do with inflation, because as companies keep having to pay more for employees because they can't find enough to fill the positions, they pass that on. They just don't eat it. They're going to pass it on. You've heard, I mean, even Chipotle, any kind of services, anything, they are continuing to pass it on. They haven't stopped increasing their prices, right? And so until you get to that point, I mean, how's inflation going to come down remarkably? I mean, it just really isn't, right? And, tomorrow, I mean, you saw a lot of those fintechs, right? Well, tomorrow, Royal Caribbean, we'll see if we're traveling, but look at the afternoon. PayPal, Square, fintechs, and then Coinbase, you saw getting just absolutely taken to the woodshed. Twilio, however you say it, that's getting taken to the woodshed. It reports earnings. I thought it actually did really good last time. We'll see this quarter. Starbucks, are we still buying really expensive coffee? Stems, the energy company, Carvana. I don't know about that one. I mean, it's been hammered so much. Can it go down any more? And so we'll see if we get a bounce tomorrow after a huge sell-off at the end of the day. Or do we continue that same pattern during the last meeting where it was like 4 or 5 days of selling off, where the market's digesting another 75 basis point hike, trying to figure out what's going to happen in December and project and all that fun stuff. But, I'll say this. As much as people hate to hear it, believe it or not, it literally is a good thing if the Fed just stays aggressive. It will suck short term, but the quicker, assuming we do, get inflation under control, the better off in the long term we'll be. The quicker the markets will recover, everybody will recover, because if it stays high, remember, you're just killing. They're just squishing a huge part of, or a huge segment of our population, right? And they can't get out there and spend and do their stuff because everything they have is going towards bills and extra costs and everything else, right? While the rest of us are running around going, it's just $19.95, baby, let's do this, or whatever the saying is. And so, that you got to think about, but also companies, right? As costs come down, that means they're going to be spending less, right, on inputs and things like that. So that means they can put more to the bottom line, right? And so everything, you just got to think about it in that context. Short term, painful as can be. Long term, hopefully this is not. And I was talking to somebody the other day about this. I thought about doing a video on this, but the lost decade, right? We've had this multiple times through history. We had it in like the 70s, 2000. If you look at the indexes, right, it took a long time, almost 10 years to basically reach the all-time highs you had in the dot-com bubble. And you see stuff like that, and you're going, please, some people are calling for this to be the lost decade. I certainly hope that is not the case, let me tell you, because that will suck if that's the case. But we'll see. I have to do some research on that and really dig more into that. And if you want a video on it, let me know, and I'll try to research it up for us, because I'll be educating myself on it as well. And so, but that's where we're at, guys. Red day. Don't let it get you down. It is what it is. Remember, as somebody was in the Patreon asked me a question, I get this question a lot. It's like, okay, I have X amount of cash. Should I start DCing in or buying or selling or whatever it is? And it's like I tell them the same thing, and I'll tell everybody on here. Nobody should be able to answer that question for you unless literally they're your financial advisor who you have showed your finances to, right? I mean, that, and anybody would answer it for you is just dangerous and irresponsible, because we don't know. I don't know your financial position. I don't know your risk tolerance. I don't know your what dates you're looking at here. Are you close to retirement? Are you not close to retirement? Like, there's just so many things you need to know. When you're going to see a financial advisor, I guarantee you, he does not say, when you sit down, okay, here's what you need to do. I'll guarantee, well, I know for a fact what they do, is they ask you a bunch of questions. They want to see some financials. Look, here's what we got. What's your goals? All this stuff. You got to know a lot of stuff where you can answer that kind of stuff, right? You can answer, but the same consistent message I have about the market is simply, cash is king in a down market, and you're going to have so many opportunities to dollar cost average in all these stocks. You want to start, and I did one a couple months ago saying, you want to start now, start now. But for me, what I'm looking for is, I'm looking for stocks that are basing out, that are stuck in these channels, that are trying to form stage ones. I have that in the Discord, and one says stage one, right, on here, forms channel bound stocks, right, like stocks that have actually formed and consolidated, and so they have these support levels, right? Because you look at the big boys, they really don't have support levels built out right now, right? They're just dropping. That's why they're dropping so fast. When you got somebody, look at, you would never think in a million years like Roblox and Shop and Netflix and all these others will be doing so good. And if you look at a lot of red days, those stocks were green. And why are they green? Because big money came in, and two, they have, some of them have multiple layers of support built in now, where they literally for weeks would just bounce off it and bounce off it and then move up and then bounce, and then move up and then move back down and bounce off that support and move back up. It's crazy, but that's what you see. And like I told somebody in the Discord, I said, look, the stocks are going to base out and start consolidating and forming stage ones before the indexes ever do, because that's what the indexes are made up of, right? And my analogy is kind of weird, but I said, think about it this way. The body is made up of organs, right? As each organ starts to fail, the body fails. The organs are the stocks. The body is the index, right? And so it's going to be no different if the organs are all looking good, or you do a transplant or whatever it is, and you got a good organ now, the body is looking good, which is the index, right? It's moving up. And so that's a simple way to look at that. And so that's why you have to look through all these stocks. And I have a list of them. I just scroll down every day and try to put in the Discord on Patreon to try to show people, like, these are the ones that are based now. And what you can also do when you find that, the ones that are just in these ranges, you can trade the heck out of them. I mean, because once they hit back down that support level, they usually bounce. That's usually happening. Once they hit the top, they start to reject down, right? And some of what's going on in the market has to affect that as well, obviously. But some of these stocks are starting to ignore what's going on in the market. Like some of these stocks were green today when the market was red, right? When the indexes were red. And that's just what I've seen multiple times. There's plenty of them out there. You just got to look for them. So anyway, let me know in the comments if you found any. I'll put them on the Discord and stuff. So anyway, hope you have a good one. Hit the like and subscribe button, and I'll see you guys tomorrow.